Today I'm with Constantine Karayannopoulos and we're discussing industrial strategies worldwide in the critical mineral sector. So let's just jump right into it with the rare earth market seems to be sizzling. I was interviewing a couple of people today. The stock has tripled since the beginning of the summer.
Yeah, valuations are way up, and it all started with the deal that MP Materials did with DOD, or DOW today, DOD back then, where there was a massive amount of money that the US government committed to MP. The whole thing has been presented as a bottom sort of price guarantee. We'll see how it unfolds rather. So with the expectations, the expectation in the markets that this will be available to everybody, every name in the rare earth industry has doubled or tripled in value since the early summer, which means that all of a sudden, all the listed companies in the space, their life has become a lot easier, so they can raise money, and you've seen a series of equity raises in the last few weeks on the back of pretty frothy valuations, which should be the longer term view of the industry, but again, execution being what it is, some companies will do better than others.
So in the rare earth space, is there another critical mineral that you're tracking right now that you've been watching with great interest? For instance, at the Critical Minerals Institute, we've been inundated with inquiries about tungsten, for instance. Is there a critical mineral you're watching beyond the rare earths?
Yes, not tungsten, because I don't know much about tungsten. I do follow lithium for the simple reason that lithium prices over the long term tend to be very well correlated with rare earth prices because they have similar demand drivers, being EVs and electrification. I think lithium prices seem to have bottom recovered. There were some capacity issues in China, some developments. So I do think that there's still about a good decade left for lithium. That runway for rare earths is much longer, simply because there may be more alternatives being developed for lithium batteries. But overall, lithium is a commodity that I follow, and I think there's still some pretty strong, attractive opportunities in the lithium space, including from a industrial strategy point of view in this country.
Speaking of countries, we started with the MP Materials DOW
Yes.
Commitment. Do you think Canada should follow this example?
No. I think Canada should get its industrial strategy together first, instead of starting, jumping into the deep end and trying to pick winners and losers without the context of an industrial strategy informing its choices in the critical mineral space. So, should there be government support for emerging producers or to attract supply chain participants? Absolutely. But the government needs to think through what the priorities are, what critical minerals mean to the industrial development of the economy, where the advantages are, where the disadvantages are. They need to do a SWOT analysis, in other words, just like anybody else would, before jumping with both feet into the deep end. I think there's all kinds of opportunities to establish not only our industrial strategy in this country and industrial strategy in this country, but also to really realize a meaningful, real critical minerals strategy, which for the past 3-4 years, all we've done is talk about it. I think this is the right time, and it's way overdue, to really do something meaningful.
Okay, so let's talk about industrial strategies. And first of all, I would love for you to define for our audience what it is you think an industrial strategy is.
Well, when I look at the last the post-Second World War industrial development of our country, this looks to me like it was the result of some planning having gone into the development of the economy. When you look around the world, all advanced industrial economies, for example, since the Second World War, were built with automotive being a significant part of their economic development, the automotive industry. Whether it was high single digits, double digits, whatever, the automotive industry was an indispensable component of economic growth in the United States, Canada, Germany, the UK, Italy, France, and in more recent years, Japan, Korea, etc., and now, of course, China. Well, the automotive industry is at an inflection point where, up until recently, we were in the middle of a transition from internal combustion to EVs. Well, the Chinese government made a choice starting 15 years ago, as we've said at your conferences, Tracy, 3 5-year plans ago, to go all in on EVs and all the technologies and supply chains associated with EVs. Fast forward to today, they dominate that sector because they managed to create ecosystems that are efficient, and anybody who wants to build EVs in China, all the components are state-of-the-art components, are all off the shelf, where everywhere else you still need to struggle to get things done. So I think, for example, the government then in Canada would need to do some thinking as to what industrial sectors would merit support. And I'm not talking about being mercantilists here. I'm talking about being strategic, about where the growth is going to come in this country. And I think automotive and related supply chains are key. Also, as part of our energy diversification, I think it's inevitable to conclude that expanding EVs and EV purchases and utilization is a necessary component of our energy balance. So we need to put it all together. I think there needs to be a mass and energy balance in this country. Apologies for speaking like an engineer, where every solution to every problem starts with a mass and energy balance. But I think we need to rethink where the growth is going to come for the next 50 years in this country, which is unfortunately an exercise that usually doesn't happen because as a lot of companies cannot see beyond the quarterly or annual planning cycle, and governments cannot see beyond the next election. So I think we need to do some smart long-term thinking in this country and come to a set of conclusions that will allow us collectively to make certain choices. And let me illustrate one thing that, one case where I think we haven't done enough thinking. We have, according to the Globe and Mail, we've committed as a country something in the order of $55 billion over the next 15 years to the EV industry and the EV battery and EV industries. That's an enormous sum of money. Some of it is cash, some of it is tax concessions, etc. Still, it's a massive number. So while we have committed that kind of money to a particular sector, I haven't noticed any commitment or even the creation of a moral obligation on behalf of the recipients of the taxpayers' largesse to utilize critical minerals from local supply chains, or even parts made with critical minerals from local supply chains. So all the companies that have received the 55 billion commitments, they can still source their lithium from South America or Asia, or their batteries from Asia or whatever, at least the components and the raw materials that will go into their manufacturing in Ontario and Quebec and elsewhere. There's no commitment to work even with local supply chains. To me, that's a massive oversight that needs to be corrected very, very quickly.
Okay, so who's doing it right now? Or can you give us an example of a country with an industrial strategy, maybe even under development, that is doing something moving in the right direction?
Well, let's leave China aside because that is a very that's a long conversation. But as we've discussed before in previous conversations, Tracy, we need to learn from the right examples, and there's all kinds of examples to pick from. Today, I think at the forefront of really smart strategic thinking is Brazil. For the last few years, 3-4 years, companies have been discovering and developing very attractive ionic clay rare earth deposits. And I'll remind the audience that ionic clays is what revolutionized the rare earth industry in China in the 90s with the very low cost availability of heavies to complement the lights that were coming from other areas of China. So Brazil has come to the realization that they have an enormous resource endowment. As recently as March, when I was in Rio speaking at the Brazilian Development Bank's conference on supply chain development in Brazil, what they have done is they put together a fund, a very modest fund of about $1 billion. Half of it coming from private sources. Vale, I'm told, is one of the largest contributors, investors in the fund. So about half of it from private sources, half of it from taxpayers' money. And they've gone out, they called for proposals throughout the supply chain. So they are investing now in developers, junior miners. In fact, I'm a little bit involved with the evaluation, the due diligence. So they are looking to bring resource extraction projects to completion much faster than these companies could do on their own, in an environmentally responsible way, without these junior miners having to sort of rely on the capital markets for their funding. Because let's face it, in the junior mining sector, sometimes the capital markets eat their young, as we are, up until the equity reevaluation during the summer, I think every single exploration company had a really, really hard time financing itself. So beyond that, though, they've gone out, they have established a network of laboratories around Brazil with universities and industry associations that they can put together a complete supply chain of skills and capabilities that will help all of these companies go to the next step and even attract foreign investment into the supply chain, the downstream supply chain in Brazil. So I think it's a great start. Of course, there'll be a lot more to be done, and we'll see how that unfolds. But I think Brazil is getting it right.
So you just got back from Estonia. Neo Performance Materials just opened their plant there. How did that go?
That was fantastic. I guess all I could say is that I'm extremely proud of what Neo has and the team that I had a hand in putting together and establishing over the last 3 decades, what they've done with that project in Estonia. The place looks great. It is state of the art, highly automated. It was constructed in less than 500 days. And the first shipment of commercial trial magnets was done in 18 months or something like that from the beginning, the start of earthworks. And I guess I did the easy bit. I was there for the planning and the decision to invest. And 2 weeks after I broke ground, in June 2023, I retired. So Rahim Suleiman, the CEO, and Greg Kroll, the EVP of Magnequench, and their team had to do the heavy lifting, but I'm really proud of those guys. They delivered a fantastic facility. And not only that, in the opening, there was a number of customers from Germany, very demanding customers who are buying those magnets for electric drivetrains for EVs in Europe. Fantastic facility. I had a chance to catch up not only with my former colleagues, but also with friends in the Estonian government and the European government, that we went through some pretty hectic times. We made that decision and we progressed the project during COVID, the Ukraine war, the invasion by Russia of Ukraine. So there was all kinds of reasons to stop and say, well, wait a minute, this doesn't make sense, let's back up. But we barreled through, and now Europe has a state-of-the-art magnet facility, which is the biggest of its kind in Europe, designed to supply magnets for electric vehicles made in Europe. So I think it's part of that supply chain resiliency that the Europeans identified as a target, 4 or 5 years ago, and I'm glad that I had a little bit something to do with it.
Well, for those of you interested in finding out more about Neo Performance Materials, please go to this website. And Constantine, thank you so much for your feedback.
My pleasure. Good to see you, Tracy.